For more on this, I'm joined by Tim Waterer. He is a business and trade analyst. Tim, great to have you here with us on TRT World. So, markets reacted cautiously, as I just mentioned. That's despite lower pressure on the dollar and precious metals. So, what do you think this tells us about how investors are reading the latest developments around Iran and the Strait of Hormuz?
Good to be with you. I think the first thing it tells us is that traders are still playing the patient waiting game to see whether that long-awaited peace deal does emerge. But it also tells us that the markets are quite unnerved by the latest US strikes on Iranian assets, because it seems a little bit incongruent with Trump's words that everything was going quite well in terms of the negotiations. So markets not quite sure what to make of that, because there does seem a little bit of a difference there in terms of what's happening on the ground versus the rhetoric we're hearing from the US president. So that's causing markets to really bide their time a little bit. And that's what we saw on Asian markets today for the most part, because it's very hard to get a beat on when we may get a result, let's say. Is this going to drag out the negotiations for several more days, weeks, or even months? Or is this something that could be resolved this week, for example? So that's why markets not willing to move too far from current levels in case there is a favourable result and they miss out on further upside from here in terms of risk assets.
And Tim, one thing that really stands out for me is that Asian markets moved in different directions today, with South Korea outperforming while Japan and China slipped. So are investors becoming more selective rather than simply moving into or out of risk?
There is certainly an element of that. I think we are seeing some minor rebalancing, let's say, of portfolios, just dancing around a few different asset risk classes there. Just like I said, we're really just in wait and see mode right now. But in terms of the Kospi performance, yes, you're right, that was playing catch up today. So that explains why it was one of the outperformers as it resumed from a public holiday. So that was catching up on some optimism from the past 24 to 48 hours. The Nikkei, that went in a different direction, as you mentioned. I think that was a result of profit taking. The Nikkei, of course, yesterday hit 65,000 for the first time there. So that really prompted some profit taking there amidst this uncertainty around the Middle East right now. So yeah, mixed performance. And like I say, markets really just waiting for the next cue, whether that's going to be risk on or risk off, depending on whether these talks materialize into a concrete deal or if they fall by the wayside.
And Tim, obviously right now, no one really knows what's going to happen with the deal. So if these diplomatic talks stall and Brent is spiked back towards its April highs of $120, does that effectively kill any hopes of interest rate cuts for the rest of 2026?
I think it probably would. When you look at it in the context of where, say, US inflation is running at now, which is at 3.8%, which is quite hot and well above the Fed's target. So yes, I think any return of oil prices to $120 and above, that's when central banks will start looking at the energy problem as more of a structural crisis. And I think that would really put paid to any plans for rate cuts this year. And I think as things stand right now, we're probably even still looking more likely to see rate hikes at this point in time, because any normalization process, I think we're talking months in that regard as well. So that probably won't please the US president too much. We know that he does want rate cuts, but whether the new Fed chairman, Kevin Warsh, can deliver them in this environment of still high oil prices, that remains to be seen. So that relationship could turn sour like it did with the previous Fed chairman, so that'll be something to watch. But yes, right now I think central banks' inflation is still shaping as the biggest headache for them heading into the second half of the year.
Tim Waterer, thanks very much for your analysis, and I really appreciate your taking out the time.
Thank you.